Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh. He's the chief economist at Nasdaq to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. Phil, it's great to have you with me as always. And we saw swings in the market this morning before the markets open and, of course, right at the open, as investors are really waiting on Washington lawmakers to agree on an economic stimulus plan, and then also the announcement that the Fed is really firing a bazooka and injecting liquidity into this economy. Let's run through that. What are you taking a look at here as trillions of dollars of bailouts are coming?
Yeah, I mean, the markets were pretty volatile pre-market this morning. Obviously, on the weekend, we expected Congress to agree on fiscal stimulus worth over $1 trillion. And at the moment, that's stalled a little bit. And because of that, the market got a little bit bearish. Before 8 o'clock, the Fed came out and said they would be buying treasuries and mortgage-backed securities in the order of hundreds of billions of dollars, potentially unlimited. And that seemed to cheer the market up. So we went from being limit down 5% on the futures overnight to slightly positive just before open and a 2 or 3% positive open. But since then, we've sort of normalized a little bit and started to fall again. So there's a lot of new news and there's a lot of data out there to crunch and still a fair bit of uncertainty.
All right, let's take a look at our first chart of the day. And looking at U.S. daily new cases, we can see that they certainly are on the incline as we're starting to get more testing.
Yeah, but I think the important thing to remember here is that it's pretty well known that the U.S. has been under testing. And so I think it was expected by the market. And part of the reason we sold off so much last week was because we could tell from the number of hospital visits and just some other external data that the US caseload was probably higher than was coming through in the actual data. Now that we've got test kits coming out, we're starting to see that that's true. So the fact we've seen such a big spike in US new cases in 1A isn't specifically due to that 1 day's instances of cases. It's because the testing is now starting to catch up.
Yeah, great point, Phil. And let's move along to our second chart here. We're going to look at different parts of the economy that the coronavirus is impacting. Certainly, U.S. restaurant business is one of them.
Yeah, and I think that's what the market's trying to work out how much of an impact on GDP this is going to have. And so rather than a normal recession where things slow down slowly and people lose their jobs gradually, and that makes people spend less, which causes sort of a recession cycle. What we've got now is a sort of mandated hard stop where a lot of people are basically being told don't go to work. Airlines, hotels, restaurants are being effectively shut down for the common good. And this chart just highlights how dramatically some of the human behaviors have changed in the US. So in the space of really less than 10 days, we've gone from normal restaurant attendance to almost none, which is good news in the sense that at least people are now socially distancing. So there is a chance that we keep the virus from spreading.
Yeah, that certainly is key. And I want to take a look at our last chart of the day, the coronavirus total cases. And it seems to lend to what you're saying, that you can see the curve leveling out as people make the conscious decision to self-isolate.
Yeah, so this chart's not a classically sort of plotted chart, which has it exponentially increasing. The scale on the vertical axis is a log scale. So each time you step up one of the levels, you're seeing 10 times as many cases. So what we're really looking for on this chart is the curve falling off the diagonal and falling lower than the diagonal. And you can see countries like China and South Korea have had quite a lot of success in the space of 20 to 30 days in containing the growth of coronavirus. And the other thing this chart shows is where all the other countries are. We're obviously, we're further from those two countries in Asia, so the increase in cases started a little bit later. But a lot of countries are tracking the exact same way as China and South Korea. And what we really hope is that these measures, like we saw with the restaurant visits, start to have an impact in the next 5 to 10 days. And we see a similar leveling off where people can't spread coronavirus, it stops spreading, and it basically can be controlled just because of the social distancing.
All right, Phil, to wrap up here, what are you and your team looking at for the remainder of this session and for the remainder of the week?
Yeah, I mean, there's actually some economic data coming out, but it won't mean much because it's all from January and February. Really, what's driving the markets right now is coronavirus. It's whether those curves we just looked at keep flattening or keep going up, and what the impact on the economy is from people who aren't going to be working for 2 weeks or maybe quite a lot longer. And so the markets are doing a great job of trying to estimate that, but there is still so much uncertainty that we're just focused on the coronavirus data and learning about vaccines and possible cures, as well as just how the spread is being contained globally.
All right, Phil, great insight. Thanks for joining me as always.
You're welcome, Phil.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.